After watching this video, you'll understand what's going on inside global markets. You'll understand what caused the crypto market to retrace in the past 24 hours. And you'll also know the key levels and what you need to do about it. Let's get into it and let's run the numbers. Hi everyone, I'm Ken from CryptoTradingKS and the CTKS method. If you're new, a very warm welcome and welcome back CTKS family. If you like the content, please make sure that you smash that like button, just destroy it, and also make sure that you subscribe. We'll cover off information that you won't find anywhere else on this channel. Jamie Dimon says the US economy is weakening. Pointing to the revision of the US payrolls data, he says he doesn't know if it's a recession or just a weakening inside the economy. And there's no question the revision was staggering. Nearly 1 million jobs were wiped off the official stats. How have the markets been dealing with this? The main markets, the US markets, were up 0.27% in the past trading session. Communication services did the best, materials did the worst. Looking at the fear and greed index from the stock market, we can see that there was a lot of optimism coming through April, and it kind of peaked around July, and we've been seeing a lot of negative sentiment entering the market over the past couple of months. People are not feeling very confident about the market. As this particular indicator moves up, it shows extreme greed when it gets up really high, or extreme fear when it gets down really low. Extreme fear is the ultimate place for an investor to buy. And yet, if you're feeling extreme fear, it's probably one of the most unlikely places that people will ever be around. Our community many years ago was born in the red in the crashes of crypto. So we understand negative price momentum is something that you can turn to your advantage. We are experts in making money in any market condition. It can go up, it can go down, it can go flat. We can make money. To us, fear and greed is a retail indicator, and it just says that retail is getting really scared at the current time. When you see this level of fear inside the market, it can go down and bleed into extreme fear levels. If that is the case, it's not a bad thing because we also know how to ride the waves of price. The thing to note, there will always be good news and always bad news inside the markets. Typically, it's pretty bad news. If you're waiting for everything to settle down and to be fantastic, you're going to wait forever. There are always data releases that are coming out, and some of the high impact ones can definitely move the markets around, and we're going to get a barrage of those over the next 48 hours. The CPI is anticipated to come in hotter than anticipated, so with weak job numbers, weak employment, increasing prices, people will start to talk about stagflation. We don't believe in bull markets, we don't believe in bear markets, we believe in BORSOG markets. Price is just simply moving in a wave. When you understand this, you don't care if the prices are going down, you don't care if they're going up, you can make money. And if that sounds good to you, please consider liking and subscribing to this channel. We would love to have you as a part of our global family. A lot of people get really excited on rate cuts, but veterans know that rate cuts is a sign that things are not actually doing well. And the larger the rate cut, the more problems there are inside the economic system. Deeper rate cuts just point to problems inside the economic system, and there's currently a 93% probability of a 25 basis point decrease in the federal funds rate, a 7% chance of a 50 basis point. 50 basis points are not good rate cuts. No matter what you've heard, you don't want that. Now, why is that the case? Because if you get a 50 basis point decrease, what it actually means, the economy is starting to crater. That's when smart money tends to sell and retail tends to buy. At the time of this recording, The major market indexes are looking reasonably okay in terms of the futures, but the Russell 2000 is looking a little bit weak, and the 2-year and the 5-year are all coming down as well as the 30-year. Gold and silver are not joining the party of decreasing yields. I'll show you why that's the case as we go through the cheat sheet. Looking into the crypto market, we can see Bitcoin is currently down nearly 1%, Ethereum down a little bit under 0.5%, XRP nearly 1% down. If you're thinking of investing and trading in Tether, maybe think again. Please let me know in the comments why this would be the case. We can see across the top 10 there's not much happening. When stacking the fear and greed and understanding what's going on inside the main markets, it's no surprise that the crypto market is retracing currently, but there are always opportunities. A lot of people in the crypto market are pretty scared, but when we look at the monthly returns on Bitcoin since January, they're pretty damn healthy. Now, what typically happens, any negative retracement is viewed as the end of the world. But this is simply not the case, and September is still positive. Yesterday, the shorts were getting whacked, and today the longs are getting whacked relatively. There's been nearly $330 million worth of liquidations across the crypto market in the past 24 hours. Getting your mindset strengthened is really important, so on YouTube, please just press that @CTKS method and press search. You'll find this, the CTKS Profit Mindset. This channel is a new way to learn how to do things and how to get your mindset correct. If you just scroll down this page, and remember to subscribe to this, go into the playlist and here on CTKS Trading Investing Music, this is an absolute ripper. I do not trade or invest without playing these songs. They are simply that good. It's absolutely free and it's an incredible mindset shift. This is pretty much where people will end up, and they'll go around their trading and investing with that level of knowledge. We do something else completely different. We do the cheat sheet. When we look at row 1 and row 2, this measures risk on and risk off. Let's check it out. And the cheat sheet is available free of charge from ctksmethod.org. A lot of people are consistently mystified on why the markets move as they do. The blue line in the background is Bitcoin. We're going to be looking at Bitcoin as the reference point across all of these different row charts. Inside row 1, it's the VIX, the DXY, dollar yen, the 10-year, the 2-year, and oil. The VIX, or the fear gauge of the main market, we saw that absolutely spiked up. Now, what did that do to Bitcoin, that blue line? It cratered it, basically. So if you were wondering what the hell happened to Bitcoin, you can see from an inverted stance. If, for example, if the VIX goes up, we expect crypto to come down. You can see this very nice marriage in here. So one of the things that you always want to bear in mind, if the VIX is spiking up, it's been basing, it has that potential to spike, it can throw negative price momentum inside the crypto market, but also the stock market. Also, it has an impact on commodities. And this is something that you must keep in mind all the time. There is a reason for prices to move. Everybody will say, it's Fugazi. It just moves all over the place. It's not the truth. Price moves structurally. Now, what's pretty interesting is that even though the VIX came up, we're seeing the dollar and the yields come up as well. This is typically not the case. When you're moving into a Fed rate cut, you would expect the opposite. The dollar to fall, the yields to fall, but that didn't actually occur. This is why we must look at price reality. We must look at the charts and not the stories. The stories define and try to explain charts, not the other way around. Inside row 2, we've got junk bonds, the euro dollar, the Aussie dollar, gold, silver, and copper. Notice the directional association between junk bonds and Bitcoin. It's a really important thing. Bitcoin is almost like another fear gauge. And that's why we overlay it on literally every chart that we can find. You can see the gold started to roll over. What about silver? It definitely rolled over. What about the euro? Rolled over. Aussie dollar, poor old Aussie dollar, rolled over as well. And copper is just trying to figure out where the heck it's going. But the truth is, we already know where it's going. It's going to structure. A lot of people were just caught up in the gold trade and also the silver trade. If you're a member of the service, you already know that there was so much overhead structural resistance on both gold and silver that that happy day would be likely coming to an end. For example, if we look into gold, looking at gold like this, it's all like, what the hell is gold doing? Why is it going up? Why is it going down? Where is the support? Where is the resistance? To answer that question, we mark up our charts with 2 levels of standard certification, and we can understand looking to the right where all the forward, and this is important, this is a leading indicator of price. For example, we were looking yesterday at gold. We knew that this 3660 was really important, as well as just below the 3680. What we've seen is that gold is starting to weaken. It could well come back and test this area around the 3583 level. Now, without an understanding of structure, you'd be left guessing, because remember, gold is in price discovery. Technically, there's no support and resistance. Technically, but that's technically absolute BS. It's not the truth, not at all. It's one of those retail myths. And if you want to abandon retail myths, make sure that you subscribe to our community. We have the best community on YouTube. In fact, structure is so good, it allows us to do estimates, end of month estimates, and structural interdependent estimates throughout the month. For example, when looking at silver, last month we had a closeout on that positive price path. And we can see in the month before, for July, we were pretty much following the structure, and then we had weakness. Now, the thing to just remember, these paths, when we draw them in, and they're all available inside the service at the start of the month, these lines are never changed. We're not trying to fit price, although we do a fairly good job of estimating where the price will go if there's power inside the particular chart or not. But that doesn't stop structural failures. So the thing to bear in mind, if it can't get above, it's going to a lower level of structure. It's a very handy guide. And again, these paths are not changed from the start of the month. They're drawn out towards the end of the month, or to the end of the month actually, and they define normalized price action. And well done to everybody in yesterday's video. So many fantastic responses. Heading into row 3, which is the S&P 500, the Dow, the Nasdaq, and the Russell. One thing that we note, look at the Russell and look at Bitcoin. Bitcoin is a leading indicator of the stock market because it sniffs out risk. It is a very important thing to keep your eye on. Typically, it goes a little bit like this. If I'm not putting any money into Bitcoin or crypto, I'm not looking at Bitcoin. I got other things to look at. That's a big mistake. And if you're inside the stock market, a lot of people will say something like this. Oh, I'm investing in Tesla, but I would never bother looking at the S&P 500 or the Nasdaq or the Dow or the Russell. Why? I'm just putting money into Tesla. Please let me know in the comments why that is not a good idea. We need to make sure that we look far and wide. Why is that? Because when we look at the S&P 500, we know exactly what was happening here. The VIX was spiking up right there. When the VIX spiked up, what happened to the main markets? They all wobbled. The cheat sheet is a fantastic tool for timing entries and exits. For example, looking into row 4, which is Apple, Microsoft, Strategy, Tesla, and Nvidia, you can notice that the Bitcoin overlay here can give you some advanced signals on if the market is potentially weakening or if it's strengthening. It is a very good timing tool. It does take time to understand, but it is incredible. And of course, with strategy, it is really, really good. Turning to the crypto market, when we look at total crypto market cap inside row 5, which is total Bitcoin and Ethereum, we can see that this particular movement up followed by this leg down. What happened in there? The VIX spiked. Now, when the VIX spiked and the DXY spiked, the yield spiked, that puts negative price momentum inside not only crypto, but also the stock market. We've seen a bit of a partial recovery here, but we'll need to look at structure to determine if it's going to continue. When looking at Bitcoin, we can see that on a daily basis, Bitcoin has been retracing, but it's starting to show a degree of strength. It's starting to come up. Now, it's pretty early days in this particular leg up, and if it continues, we would see a taking out of this retail level of around 118. It's very important to be able to read what retail is going to think about. They're going to think about the 108,500 and they're going to think about 101,350. And to the upside, they're going to think around the 124 mark. Students who have done level 1 and level 2 standard certification know that we just mark up our chart, pop the indicator on, and then draw SCs around those CTKS levels. Before I was saying that retail is going to look around this 117 mark. That 117,000 is unfortunately not where the resistance is. The resistance is slightly higher, up around the 118 to 119. So if they, for example, retail, find that the price gets above there, they're likely to go all in and more just before it retraces. And this is why people get literally cut to shreds. Their account is always getting shredded because they don't know where the true support and true resistance levels are inside the charts that they're putting money into. The other thing to note, we're currently in an area of very good structural support, and that's what's enabled Bitcoin to come down and to base out. Now, if the VIX starts to spike, we're going to come down. There's no two ways about it. So just be aware of that. But if the VIX continues to come down, we are going to fill this positive CTKS gap and start to come up, and rather dramatically. Because if you think about the fear and greed index, it's been going down for months and months and months and months. That means that retail has been basically thrown out of the market. Retail is something like this. Price goes green, everybody says, fantastic, I'm going all in and more, and they typically buy around the top, only to see it retrace on a natural price movement. And of course, the problem with this, if you're buying here and then you see this retracement, you panic, you sell, you bought there, you sold there, you get in again and you sell there, you get the idea. It will just basically cut your account into tiny strips. You don't want that. You want something else. You want to understand where the structure is ahead of time and to think and buy and sell structurally. It is literally the gateway to profitability. Knowing where support and resistance levels are is wildly important. Let's have a look at ETH. When we see ETH, it's looking fairly weak. It's trying to base, but it's literally flatlining. For the past 5 days, it's gone pretty much absolutely nowhere. We know that there's a raft of high-impact economic data releases coming inside the US market, and that's likely to cause volatility inside the crypto market and, of course, the stock market as well. Therefore, knowing where the structural resistance levels are and structural support levels are is really, really important. And we can see from this that structure is around that 45.15 up around 4700. We do have underpinning structural support at 4200 inside ETH, but this could be breached. If it does get breached, 39.28, and there's quite strong structural support around that 36.26 upwards to around 37.42. Inside the music playlist, there's a song on green fire. This is green fire, and this is the result of green fire. It's literally people buying at 5,000 and saying at 4,300, I wish I didn't buy that. Please let me know in the comments, have you listened to the green fire song? It's an absolute safeguarder of your investments and your trades. Please also let me know, where do you think, and of course this is Ethereum on a daily basis, where do you think ETH is going in the next 24 hours, say up to a week away? Where do you think? Is it going positive? Do you think we'll break out of this particular area, or do you think it will come down? Turning to row 6, which is Litecoin, Bitcoin Cash, Binance Coin, and Ethereum Classic, we can see that the markets took a bit of a dive as the VIX came up, the DXY came up, and the yields also came up. We also noticed that through the cheat sheet, the euro dollar, the Aussie dollar came down, gold was coming across, and silver was coming down as well. When you learn how to stack probabilities, it's a total and complete game changer. Now, looking into Litecoin is not feeling the love. Bitcoin Cash not feeling the love, but here again goes Binance Coin. Pretty interesting stuff. We'll have to have a look and see if Doge, ADA, Solana, and XRP are getting excited as well. Ethereum Classic, very unexcited. Just having a quick look at Binance Coin. We've been tracking Binance Coin, and I was saying, even though across the weekend we did really well, we were likely to consolidate. And that was a little bit of a kind of a weird comment. Why would it consolidate? It's going up so much. It looks fantastic. And then it did exactly that. The question is, why did it consolidate? And being able to understand where a consolidation will occur is like a license to print money. You really want to know this stuff. So when we look at BNB, which is currently 882 and 40, it's coming up to this, all of this structural overhead resistance, and it's filled that positive CTKS gap. Now, what does it mean? It means that it has really good underpinning structural support. If it manages to get above here and start to consolidate upwards and over this level, I think BNB can do really, really well. But it's stuck in this range at the moment. Now, what determines and dictates if BNB will go up or go down? If you said Bitcoin and total, you are awesome. Let's have a look into row 7, which is Cardano, ADA, Solana, Doge, and XRP. We know what caused this naughty behavior in the past 24 hours. It was the VIX spiking that brought down Bitcoin, brought down the futures, brought down the major market indices. It brought down everything. That's why if you ignore the VIX, you do so at your peril. Now, what is ADA thinking about this? Well, the VIX did its job, and now we've got a bit of a retracement inside Bitcoin. We can see that ADA's retracement isn't as strong as Solana. Solana is literally back up here, which would be around this area. What about Doge? Doge not as strong. Solana has the pole position on strength at the current time. And in the crypto market, you want to look at strength. XRP is not feeling the love. It's a little bit weak. XRP can turn around in a heartbeat. Just bear that one in mind. Looking from a structural perspective at Solana, here we're on the daily basis. There is a tremendous amount of underpinning structural support for Solana at the current time. This means that Solana has actually created a very good base to go higher. There's much thinner overhead structural resistance as well on Solana, and it does get pretty gappy. And those gaps are the things that you want. If we see continued positive momentum inside Bitcoin and a continued reduction in the VIX, I believe Solana will be outstanding. Sounds like I invented a new crypto. Solana. As part of your trading and investing routine, if you listen to these songs, it's really going to help you out. It's just a new way of learning and transferring knowledge and experience. And they have great beats. It's also really important to keep positive. Keeping positive under all conditions is really important. The markets will just put you through the ringer. There's no two ways about it. When markets are retracing, it can be a terrible feeling, especially if you're over positioned, if you've bought too high, just and pulled in on the green fire. But the key is, if you are not dedicated and committed, focusing on your learning, doesn't matter if you win or lose, but you focus on learning, you will find that you can take advantage of the opportunities in the market as they present themselves. One key to always remember, the markets are non-emotional. We as people are very emotional, but it's important to not be emotional. Just think structurally, be positive, and the world will just open up to you. I thought in the comments today we could talk a little bit about scaling. Starting small is a really good idea. You get an understanding of what to do, but you must scale after a period of time. If you would like to share your experience with scaling, that would be absolutely terrific. I'm sure that would help a lot of people. Have a great day or night ahead, my friends, and Kate and I look forward to catching up with you again in the next video. Bye for now.